Hello everyone, this is Marv Eisen from Timeless Dollar, and you're looking at the 3-minute chart of the S&P E-mini futures during the day of July 31st. Now, July 31st was one of those days where the Federal Reserve announced a decision on interest rates. Every year, Federal Reserve meets 6 times to decide if they're going to hold interest rates steady, raise them, or lower them. And their decision has the effect of substantial movements in the market. Now, of course, hindsight is 20/20, and I'm showing you the entire day of trading for July 31st. The first thing that you'll notice is that the market doesn't move much up until Federal Reserve announced that they're going to lower interest rates 1/4 point. Can you anticipate which way the market is going to move when the announcement is made? Sometimes yes, sometimes no. But typically, what you're going to find is that there will always be a move. Now, generally, the market anticipates what the Federal Reserve is going to do. A reduction in interest rates will generally cause stock prices to rise. But in this case, it went down right here at 2 o'clock. And don't look past 2 o'clock. I'm just talking about this 2 o'clock time frame. Instead of rising, the S&P declined. Why did it decline? First of all, the market generally anticipated a decline in interest rates. If you've ever heard the expression, buy on the rumor, sell on the news, well, you're seeing that right now. The market then stabilized and almost came back, but never really came back to the point where it first was traded at 2 p.m. And at 2:30, a realization came upon the market. If the Federal Reserve is lowering interest rates, they're anticipating deteriorating market conditions. Now, if you've been watching my videos, you know stochastics is the only indicator that I follow. But on days of rapid market reaction to important news, the stochastics is less important than absolute price movement. An absolute price movement for the half-hour period following the announcement, prices never regained the high at the time of the announcement. So you could have anticipated, and forget about the stochastics again, you could have anticipated that the market was not going to rise above this candle here, 3013.75. So you could have taken a position anywhere 310, 312 and set a stop at 3014. Taken a position to the downside and you would have been rewarded mightily. And you could have anticipated this solely by the price action over here. Solely by the price action. Now, of course, hindsight is 20/20. So looking at the entire day, we can see that this is where the action was. My advice, if you're a beginner, novice, or intermediate trader, is that on days where the Federal Reserve is going to announce an action on interest rates, that you not trade. Stay out of the market. Wait until that 2 o'clock hour where the announcement is going to be made. Here you saw a momentum move, and it was really a short move. This is a 3-minute candle, but it only covered about 10 points, which is a pretty big move in a 3-minute time period. But then it recovered. I mean, you could have made money here if you jumped on with this momentum move if you were looking at a 1-minute candle or even a 3-minute candle. I like to trade 3-minute time frames. But if you were patient, and remember, if you took my course, patience is so important when trading. If you were patient and you just looked at the price action for the period following the announcement, you'd notice that prices never recovered to the point at the time the announcement was made. And so you could have taken a position to the downside and made a lot of money. But of course, again, hindsight's 20/20. Let's look at the day as it developed. Right here, I have my cursor at 9:27 on the morning of July 31st, 9:27 Eastern Time. And I'm going to show you the price movement beginning at 9:27, just when the market opened. And here we go. Okay, so there we are. So again, looking back at the day, from the morning until the 2 o'clock announcement, we have a little bit of game playing, no trends, just some trading up and down here. Market is not trending, hard to read, and everyone's waiting for this 2 p.m. announcement. And at the 2 p.m. announcement, we have this very quick, this is a 3-minute chart. So this happened within 3 minutes. The market declined, recovered, but never fully to the point of where it was trading at 2 p.m. You could have taken this price action. Again, if you read the day according to the price action only, you could have looked at this price action, said to yourself, prices are not recovering to 3016. What if I take a position to the downside with a 3016 or 3014 stop? And if you did that, man, you did very well. So anyway, this is Marv Eisen from Timeless Dollar. Hey, if you're looking for a way to make money, you can trade the market successfully and profitably if you take a course and learn how to trade, learn the movements of the market, because they do repeat many times, more often than not, and you can make money profitably by trading just a little bit of time during your week. Not even a day. You don't even have to trade every day. You can just watch, observe the market, wait for a really good setup, and you'll be able to read them if you take a course. Take my course at Timeless Dollar, Trading Mastery for Financial Freedom, and I hope to see you there. You can profit, you can make money, and you can be financially secure for life. Have a great day.